First of all, we're going to welcome the new kid on the block back again. Welcome to 2026. First time on the Jon Sanchez Show, Mr. Aaron Clark of Realty. How are you, my friend?
I'm doing great. Thanks for having me.
Good. Happy, you betcha. Happy New Year to you, my brother.
Yeah, same to you guys. Yeah, it's hard to get
Thank
back
you.
in the grind of things,
Really is. I tell you, it's just like we keep joking about on the show each and every day. It's like, well, all right, we got an empty scorecard right now, right, or scoreboard. You gotta just start grinding away for rest of the year. But somehow, some way, before we know it, we'll blink and we're gonna wake up and it's gonna be Christmas time again. I just know it. It just goes. Dwight and I are a little bit older than you, young man, and so we'll just trust us when we say time does go faster the older that you get. Does it not, Mr. Dwight Millard?
Absolutely.
Highlands Mortgage.
Absolutely, John. And Happy New Year, Aaron and John. But
Absolutely.
John, it's amazing because when Christmas is on Thursday, everybody takes that, gets ready that whole week pretty much off, right? Then you got to blur till New Year's, which is on next year is Friday. So now it's going to be the same. It's going to be the same drill. You're just going to be, what day is it? Where am I supposed to be?
I think my biggest frustration is trying to get business done because this and tax time, one of the busiest times of the year for us in the firm, and trying to get a hold of anybody and get stuff done. It's from basically Christmas on until this last Monday, almost impossible. You almost like throw up your hands and say, "Why am I even trying?"
It's a flashback of the COVID days. Remember when?
It really is.
When you needed somebody to answer the phone, nobody answered. Yes. It was a 5-hour wait.
Exactly. Well, Mr. Clark, great to have you again. Mr. Edge is traveling today, hence the reason we have Aaron sitting in with us. But let me tell you what we have lined up for you folks. We're going to go through, again, this record-setting day. Or, Dwight, what kind of day was it on the Dow and the S&P today?
I can't believe you leave me out. It's another record-setting day. It was beautiful. Right. I love saying that phrase.
I know. You and me both. I love hearing you say that because indeed it was. What a very interesting trading session once again that we find ourselves in. But the bottom line is it was a good day. We're going to tell you all the details behind it. And then we're going to get into, of course, our real estate topic of the afternoon. Real estate falls apart. And boy, I'm so glad Aaron's joining us on this one. Real estate deals can fall apart every day. But so many of these deals don't have to fall apart. Today, we're going to be doing is the following. We're going to be talking about how to keep a real estate deal alive when a buyer backs out. So whether you're buying, you're selling, you're working a transaction right now, you're not going to want to miss what Dwight and Aaron have to mention about this. Guys, I saw a stat today, and I wanted to bring it up just real quickly here that I shared with both of you on the number of real estate transactions. Yeah, so here it is. According to Redfin, roughly 53,000 U.S. home purchase agreements were canceled in the month of October. 53,000. That equals to 15.1% of homes that went under contract that month, up from 14.3% a year ago. Those stats include deals where buyers cancel pursuant to contingencies, something we talk a lot about, and also where they backed out without the right to do so. Aaron, how common is this before we, get to the stock market side? How common is this in the real world?
Yeah, it definitely adjusts according to the seasonality that we're in. And what I mean by that is, if it's a hot market and rates are low like it was during COVID, no one was bailing because they knew they had a lotto ticket. But now as things kind of calm down and there's more opportunities out there for people to purchase a different property if they don't like that one, it's a lot more common. I would say we're probably locally here, just from experience of communicating with my colleagues and such, probably around 20%, I would say, in the last few months.
I was blown away. I honestly, when I saw that stat, I thought, man, there is no way. That is a lot of deals. And now you're saying 20%. So
yeah,
I to be honest, again, I'm shocked. Dwight, you obviously see it from your end, so I know it's not shocking to you, but boy, those of us on the outside, yeah, that is quite surprising.
If you get in the large metropolitan areas, John, or where there's a lot of new construction going on, Aaron's correct. What's happened is they go into a contract, right, Aaron? They go in, they tell their dentist and everybody becomes a realtor, right? And says,
that's the problem.
I bought over there and I got this, and they start going, they have buyer's remorse.
Yes.
And it's I had one recently, John. They walked away from their deposit of $5,000.
No kidding. Yep. Yeah.
But it's probably more common. Aaron's probably right. It's probably in the 20s in northern Nevada, but elsewhere across the country, it's probably.
So hence the advice to sellers: don't count your chickens before the eggs hatch. Right?
No.
Don't spend
count the baby until the
baby.
baby's born.
Yes.
That's what we always say.
Wow, that's amazing. Well, Aaron, there's a lot of things we're going to be talking to you about, and you, Dwight, of course. First of all, mentally, how do you handle that as a real estate professional? And then, Aaron, I want to get into some of the legalities a little bit also, which is I think there's a lot of confusion out there as far as what can you walk away. Like Dwight just said, that one buyer walked away from a $5,000 deposit. Wolf is focused on Nevada, but I know some states, so lower down payment and in like 1% in one state that I read about, no big deal to walk away from that in most cases. But you start getting into some of the bigger, like Dwight said, some of the bigger metropolitan areas where you got, bigger deals, multi-million-dollar deals, and you're putting 1%, 5-10% down. It's substantial. And right, Aaron, that's when the lawsuits happen many times, right?
You're absolutely.
More
money means that they got more skin in the game. Yep. So you get less likely for people to back out for no reason.
Yep, exactly. Yeah, the last real estate deal I did, I had that exactly happen. I had a buyer come in, full cash transaction, thought, oh, this is way too good to be true. Literally the day before escrow was supposed to close, backed out, and got to keep $25,000. So I'm like, okay, thank you. Move on to the next one. So it can definitely happen there. So it's going to be an interesting topic. I don't know if we've ever even discussed this one before.
I don't think so. This one doesn't sound familiar. I like it.
Yeah. Good. Glad you like it, buddy. Glad you like it. All right. Well, let's see if you guys like this also. Let's get into the market action. So here's where the market finished up: a 485 gain on the Dow, 0.99% to a record close of 49,462. Nasdaq up 151.65% to close at 23,547. S&P up 43.62% to 6,944. It was really, guys. All I can say is there was no specific news behind it. It is this beginning of the year momentum, record close for the Dow, record close for the S&P 500. This momentum, of course, that we experienced and enjoyed so much yesterday. Yesterday, of course, we had the Dow closing up almost 595 points. Today, one record was set besides the closing level, and that is we closed above 49,000 for the very first time. I want to give you guys some perspective. Just give you some perspective here. I'm going to show the age here, Dwight. When I started in this business in 1993, when I got my license, the Dow was at 2,200. And here we are, 49,461.
John, when we were in college in the 80s, we were talking about, I think it was 18, 17, 80. Remember when you talk about it in your different classes?
Yep, wow. Absolutely. I know.
Everything seemed like a penny stock, right? Why didn't somebody tell me to buy some of that stuff?
Just buy the Dow ETF. Yeah, exactly.
Yeah.
Do you think that it correlates with the velocity of money and inflation, like equal over the years?
Yes and no. Aaron, that's a great question. And I'll give you my personal opinion. That money and inflation and the correlation, absolutely right on that. But I think there's a bigger reason behind it. And here's what it is. And I've shared this story, but I don't know if you've ever heard it, Aaron, so I'll mention it real quickly for those that may have never heard me say this. I can remember, so I started off when I got licensed, I was with Shearson Lehman Brothers, right? Obviously a firm that got taken out. They eventually became Smith Barney. So I spent my first 5 years of my career there, and I just wrapped up year 36. So it shows you how long ago it was. But we had a gentleman come into our office, and we always have, I'm sure, Aaron, in your old days when you were big firms and stuff on the real estate side, you always have wholesalers come in, right? And they're telling you about their great products and everything. And this guy's named Harry Dent, and he's still around, but he's a Harvard economist, and he was a young guy and really hungry and trying to make a name for himself. So he comes into our office, and we've got like 35 brokers in the office, and we sit down in the big conference room, and they always have to buy lunch. So we're sitting there scarfing down, and he goes, I want to tell you guys about something. He just wrote this book on this. He goes, I want to tell you guys something, thing called the Great Baby Boom that's coming up. Now, mind you, this is 1993. And I said, what is the baby boom? So he gave this analogy, and I still haven't forgot it to this day. And he said, look, we've got this population boom that's going to be happening. I forget what year the baby boom, you remember, Dwight, what year did the baby boom generation start? As far as when we started seeing it in the economy, maybe 10 years ago, I'm guessing, somewhere around
probably.
there.
Yeah.
So
15,
he was far out in front of his skis, right, Aaron? I mean, here we are in 93, and this guy's predicting, 2000s, 15, right around there. we're going to see this great population boom, and everyone kind of sat up in their seat and put their fork down. What are you talking about? He says, here's the analogy. You got all these people turning age 50 all at one time, right? And there's going to be over 10,000 people a day turning age 50. Well, guess what? Just do the math. And in about 15 years, the average retirement age, of course, 65. In about 15 years, those people are going to be retiring. What are they going to be doing those previous 15 years from age 50 to 65? They're going to be saving and investing like we've never seen in our entire history. And he said, and this is the analogy I was getting to, he said, picture a python that just ate a big rat, right? And you see that rat, as gross as this sounds, going through the body of the python as it's, swallowing it and digesting it until it gets into its stomach. And he said, that's the baby boom generation flowing through the economy, right? They're going to have incredible buying power. They're going to buy real estate. They're going to buy stocks. There's going to be an incredible economic force. And son of a gun, the guy was spot on. So I think, to your point, that really was one of the biggest, and still is one of the biggest driving forces. But as Dwight and I and Corey talk about a lot, Aaron, is so that's still going on. It's going to still continue for quite a few years. But a bigger situation, back to the baby boomers, is the great wealth transfer, right? And I keep bringing this up, especially as we talk about AI a lot. We've got this great wealth transfer that's going to be occurring where trillions and trillions, I've seen predictions from 3, 5, 9 trillion, who's ever number, bottom line, it's in the trillions of people Dwight and I's age, we're both 61, of transferring money as we get closer, and neither one of us want to retire, but we'll say hypothetically, is, if we got closer to age 65, 67, you start thinking about estate planning if you've got a good net worth, and how am I going to, transfer money to my kids through proper estate planning, et cetera. Well, guess what? That whole generation, meaning our kids, our grandkids, they're going to find a significant sum of money through, again, the great wealth transfer. So that will be another driving force into the stock market. I mean, guys, I honestly don't feel that it's way out of the question to say, obviously, I wholeheartedly believe we're going to hit Dow 50,000 this year, but to hit Dow 100,000, I mean, it could, I don't know if it'll happen in my lifetime, but I'd say over the next 15, 20 years, I think it's very, very possible that can happen. And so, yeah, just go out and buy your favorite index funds, and you probably do pretty well, to Dwight's point. But in my opinion, you do better with professional money management.
Absolutely.
So, gotta throw that in there. All right, guys, I'll come back, give you some of the movers, and then we'll get into our topic: how to keep a real estate deal alive when a buyer backs out. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of Highlands Mortgage and Mr. Aaron Clark of Edge Realty. Once again, we finished with a gain of 485 on the Dow, 49,461, a record close. NASDAQ up 151, S&P higher by 43 to a record finish there, 6,944. Who are the winners? My goodness, I could spend the entire show, which I'm not going to, telling you because they were strong. Memory storage names really led the pack. Microchip up 11.65%. They issued a really strong upward revision to their fiscal third quarter guidance. You had SanDisk up $75, 75.55, 27.56%. Western Digital up $31.50. I mean, again, the list goes on. NVIDIA, which was up this morning, kind of faded into the close, down 84 cents to a price of $187.28. A lot of buzz around NVIDIA early this morning. Of course, Aaron, I'm surprised you're not there, being the computer nerd, the Consumer Electronics Show in wonderful Las Vegas. What's that?
I watch the highlights for sure.
Yeah, every year I swear I'm going to go.
The robotic stuff they're doing right now is insane.
I can't imagine. Yeah. I can't imagine. Well, yeah. That's some of the things that, of course, NVIDIA, Jensen Huang, the CEO, was talking about yesterday, the autonomous cars and how NVIDIA is getting into that side of it, obviously from the chip side of things, the AI supercomputers. I mean, the list is just going on and on. So, but yeah, like I said, NVIDIA down a bit. Tesla was also down a little bit, about $18.71 to $432.96. By the way, Tesla, I don't know if you guys saw the headline today. X, of course, excuse me, XAI. There's too many X's in his companies. XAI got a $20 billion another round of financing. Video was a big player in that, but there is kind of the who's who of everybody in there. But again, this is going to be one of the most hotly contested IPOs of this year when that goes public, and the valuations just continues to skyrocket, and everybody's trying to throw every dollar they can into this thing before the IPO. So it'd be nice to be on the inside like that, because I think it's going to be a massively successful IPO when it finally happens. Again, they're saying this year, so we'll see. All right, let's hit the commodity side real quick and get some mortgage rates going for you. Oil prices today pulled back $1.19, 57.13. Gold at $44.20 to $4,496.30. Mr. Millard, the 10-year Treasury yield today goodness, I forgot to write my notes down. Excuse me. I don't even know what the 10-year did. Dwight, tell us what mortgage did, and I'll tell you what the 10-year did.
Yeah, so John, I mean, it was a very slow day. I mean, we up 1 basis points to a 30-year fixed rate according to Mortgage Daily of 6.20. We've been stuck in this now for quite some time. But what was interesting, John, in the morning, we started off, I watched the mortgage back trading. You're up 3 basis points, then you go down 9, you go down 6, and we finished up 3. So, I mean, there's obviously some volatility, but I don't know where the next move comes from other than, because you already got Fed governor saying I don't see any reason to lower. I mean, they're going to squelch my 5 first cuts. Right.
Aaron, Dwight, the final show of 2025 went out on the limb. I mean, over the skis, out on the limb, and saying he's predicting 5 cuts by the Fed this year.
Quarter point.
5 cuts.
5 straight quarters.
Yeah. I'm going to hold you to that one, Dwight.
I know we all are.
I'd like to hold myself to that one. Yeah, but
Dwight promised us steak and lobster at our favorite restaurant.
They can't.
I want in on this.
Yeah, you're in. You're in.
Yeah. You're grandfathered
in,
right?
Boys. Yeah, you're in, Aaron. You're in.
Sweet.
I just invited you in, even though you know.
See, hey, but Aaron, but that just washes John and I, because if I lose that, because he owes me for the USC TCU game. That was
We're gonna remember that one, Dwight.
Yeah,
that's right. I'm negative 1 lobster steak dinner to you.
You are. You're gonna be 2. I'm gonna be 5 straight.
Yeah, I know.
Is that? But John, I think that's the only thing I see around the corner that can affect any of these things. I mean. Well, quantitative easing on the MBSs, maybe? I don't know.
Yeah, it's not having much of an effect. Well, but I'll tell you, you're going to have a hard time, Dwight. And I'll tell you this, because obviously we're off to a very strong start for January in the markets. But you're going to get to a point, especially with these records, unless we get a pullback here soon, you're going to get to a point where these bond traders and things are going to go, this economy is ripping right now. So, of course, what are they going to do? They're going to sell the bonds, and that's going to drive your rates up. So the optimism and performance of the stock market could be, I think, is probably right now your biggest negative in the bond market and the mortgage rate side of things.
Why do I want to sleep a little bond over here that does nothing? And
right,
I'll have opportunities for the lifetime to buy more.
Yeah, I mean, geez, here you go. Just use the Dow as an example, up 1% today. So you're going to go park your money in the money market now for 1.5% when get these big days in the market. 2 days in a row. I mean, my gosh, what? Geez, yeah, we've gained over 1,000 points just in 2 days between today.
So what would make you think the government wouldn't, the Trump administration more specifically, wouldn't start participating behind the scenes, John, in MBS quantitative easing, buying term mortgage backs?
They could be.
I would think if Trump wants rates down, he knows that's the best way to do it.
Yeah, absolutely. But I think the other thing too is you're going to have to wait and see what happens in May when we get a new chairman in there. I think if I were Trump, that's what I'd be doing. I'd be going, rates aren't bad. They're not great. They're not bad. They're not hurting anybody at this point. Let's just wait till I get my guy, in the Fed, and get my guys and gals around the table as far as the FOMC as time permits and terms run out and that type of thing. Then I think you'll start to see some pretty aggressive action at that point. That's my opinion. Speaking of Trump, big headlines, and I'm scrolling right now. I'm not seeing this. Oh, there we go, right here. I want to throw this out there. Now, this news came out not long before the stock market closed. Here's the headline: the president and his team are considering a range of options in order to acquire Greenland, including utilizing the U.S. military. That was according to White House Press Secretary Carolyn Leavitt. That was, again, right before the close. I'm not seeing it affect the futures at this point. But, boy, guys, I don't know. This is going to be interesting. We just going to go around the country and keep grabbing countries, or go around the world and keep grabbing countries.
I got to get licensed in that country.
Yeah, right. Exactly.
Gosh.
My gosh, we're gonna expand it. I mean, we're gonna dramatically expand the territory of the United States to keep on this path the way 2026 is starting. Yeah, he said on Sunday that the U.S. needs the Arctic island for national security purposes, pointing to Russia and Chinese activities in the region. Of course, Greenland and their leaders and other European leaders are coming back going, don't you dare do this, and so on and so forth. That was the latest headline today. But like I said, luckily it did not really impact the market. Thank goodness. Alrighty, boys, we're up to date on the market, up to date on mortgage rates. When we come back, the floor is Mr. Clark's. Again, what are we going to do if we find ourselves in a real estate deal that we have to keep alive when that buyer says, I want out of this deal? It's not that easy, and Aaron's going to educate us and all that. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hello, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with our dear friend, Mr. Aaron Clark, filling in for our other dear friend, Mr. Corey Edge. Of course, Dwight Millard, Highlands Mortgage. He is always here. All right, once again, we're going to get into our topic, which is a very, very exciting topic, because as real estate activity starts to pick up, right? We're into a brand new year. We could see a lot of this going on. And according to Aaron, roughly 20% of deals locally fall out. And that's what we're going to try to get to the bottom of how this is prevented. Once again, as far as the market, 485 gain on the Dow to a close of 49,461, record there. Nasdaq up 151, S&P up 43 to a close of a record of 6,944. All right, Mr. Clark, let's get things rolling here, because we got a lot to talk about. Once again, Aaron, when we start looking at this topic, you got the human element, like Dwight said earlier. People get buyer's remorse. I mean, there's a million reasons buyers will back out of a deal. But by the time the show's over, I want to really boil this down to, from a legality standpoint, what legs does the seller have to stand on? What legs does the buyer have to stand on? But let's go back to the basics. What do you see as a real estate professional for many years? What do you see, Aaron, as the main reason that buyers back out of a deal?
Well, I think mainly their reasoning is either they have buyer's remorse, like we talked about, where maybe they got into a deal, they got emotionally captivated by it, and then, a house down the street that they like better is on the market, and it might be a little bit cheaper or a little bit more, but they don't have to do that grand remodel that they were planning on doing.
Right.
So that always kind of instigates that mentality of, let's abandon ship and try to get that one. And, we haven't seen a market in a really long time, other than the last, year and a half or so, where there was a whole bunch of stuff to choose from. Now you got a lot more options than you've had before. So before, it was like, if you just got something, you just stayed in it.
You were happy. You were grateful. Yeah.
You were lucky. You were one of those people. Go ahead.
I was going to say, so a question popped into my mind. Sorry to interrupt you. In all your years of doing this, Aaron, how many times have you ever had someone call you, let's say within the first 24 hours? Like, whenever I get buyer's remorse on something, it tends to always happen when you wait. That's always my test. When I wake up the next morning, if I'm still excited about whatever it is I'm going to buy, then I know, okay, I'm going to go through with this. But man, when you wake up that next morning, you go, oh my God, what did I do? So how often does that happen, that like around that 24, 48 hour time period?
It was funny, because I was talking to Corey at the end of the year. I had a client that did that very same thing. It was 2 hours later. They got home, started talking about it.
I remember that bad.
And I told him, I said, hey, listen, we don't have to move right away. We've got some time. Sleep on it, have a meal, discuss it with whoever you want to discuss it with, and then we'll decide tomorrow. He's like, nope, I want to do it right now. I'm like, are you sure? He goes, yep, I want to do it right now. So we did it, and then they had accepted. And as soon as they accepted, it wasn't 30 minutes to an hour after that he goes, is there any way to get out of this thing? And I'm just like, my gosh, it was not fun.
Yeah.
And then the problem is then I got to call the agent, and before, you're sitting there sort of fronting for your client to say, nope, they're solid. They've got all the money. They're in love with this house. You need to accept their offer. And then you got to call them and be like, sorry, none of that actually was the case. Yeah. It's horrible. So you really try to prevent it on the front end, for sure.
Yeah, absolutely. So speed obviously is an issue. So I think this is a good time. Let's transition based upon that great story, Aaron. Let's transition to, let's walk the audience through, for those that may have not bought real estate in a while, let's walk them through the buying process, and then let's get down to the legalities of how we can get out of a deal when we can't, protection on both the buyer and the seller side.
Yeah. So, once we look at a house, we want to buy it, we write up the offer. And at the very end of the offer, there's a section in there that says, well, I should say at the beginning, it says, how much earnest money deposit are you going to include in your purchase? That number is completely negotiable. You could put $1 up to the full price of the house if you want.
Okay. Glad you mentioned that.
All of those depend on a person, like a VA buyer that's doing zero money down. Maybe they have zero money, so their deposit's like $1,000, just to get in the deal. But if you have something bigger, more expensive, it's going to be a lot more. And then at the end of the contract negotiation, there's a section in there where we decide by selecting A or B, which is either whatever the deposit is considered the total amount of money that the seller has a right to if there's any default whatsoever, and they can't get any more money than that. So whatever that deposit is. So let's say we negotiated $5,000. It says on there, and they have to agree to it, of course, but let's say they agree to it, then the seller's only recourse would be keeping that $5,000. They can't do any more. There's another section on there, and this was revised like maybe 5 years ago-ish. There's another section on there where you can select, and it's punitive damages. So it's actual damages incurred by the seller. So in that instance, the seller can then go after the buyer for not only the earnest money deposit, but they can seek more in a situation where they've incurred more damages. Let's say they took an offer in a busy market. You said you were solid. They took it off the market for months, gave you some concessions, and then you backed out in the middle of winter when they can't sell their house because Tahoe's under 20 feet of snow, that type of thing. So those are the different kind of opportunities on that.
Okay, so how do you counsel your clients from a buyer perspective as far as checking box A or B, and also from a seller's perspective?
Well, I mean, obviously from a buyer perspective, when you're representing your buyer, you always want the damages to be the earnest money deposit and nothing more, because everybody's totally aware of what's going to happen. There's no
worst case
negotiating,
scenario,
lawsuit, et cetera. I mean, there can always be a lawsuit, but everybody kind of agrees to that concept. And then when you go in there, you explain to them, like, you have contingencies that are there to protect you. And those basis contingencies are the main ones. They have to qualify for their loan. So let's say somebody gets into contract, everything's great, they're fully approved through Dwight. 10 days down the line, they're ready to go with the full intention of purchasing, and their company closes and they lose their job. They can back out and still collect that earnest money deposit because it's contingent upon their loan qualification. They can no longer qualify for a loan now at that point, so they're going to get their money back. Or an inspection, that find out that, and this happens all the time, roof is bad, and they go, all right, well, we want Mr. Seller to pay for a brand new roof, and the Mr. Seller says, tough, I'm not doing it, I'll give you $5 to go away, and just buy it anyways. And they go, well, I don't want to buy the house. So now they cancel, they get their money back. So you have that. Appraisal issues.
Yeah, I was going to say.
You're in contract for a purchase price that both parties agree that's contingent upon the appraised value coming in at or above that price. So if you're in purchase contract for $600,000 and the appraisal comes in for $590, and you negotiate with that seller and say, hey, I can't qualify for $600, it's only worth $590, that's what my loan basis is on, then you can cancel and you can collect that money back. But all of those terms are in the contract, and they're negotiated based upon whatever outline we put in there, number of days, etc.
Okay, that was my point. How much can you modify as the real estate agent? Can you modify, or how much is already in there in hard print of those contingencies?
So they're all blank. So the appraisal contingency, it'll say, do you want to include this? And then they include it, and then it says how many days, and then we write in the days and we negotiate it. So we could put 40 days because the contract's 40 days, and you can cancel up to the 40th day and without recourse. But a good listing agent is going to protect their seller and go, all right, well, we know basic right now to get an appraisal is, maybe 20 days, 21 days on FHA or conventional loan. So we're going to counter you to 21 days, take it or leave it. And then once you hit 22, unless both parties agree, that contingency is gone. That doesn't mean you don't have other contingencies, but that one's done. Same with your inspection contingency, has a time period limitation on it. That's negotiated to whatever. You can have a contingency that's based upon, I need to sell my home in order to buy that home. And so I want you to give me 14 days to get my home into contract, and it's got to close, etc. So if any of that happens, then they can cancel and get all their money back. So when you're a seller agreeing to these terms, you need to make sure that whoever is representing you is going through all of these possible scenarios, so that one, if it happens, you have a plan B of, all right, let's rescue this. Or if something happens that, it sort of is out of the blue, that you can prepare for it, create such a culture shock, and you're not moving mountains to move out of your house in time only to realize it's not going to close.
Right.
Jon, I think it's important to present that a lot of this that Aaron's talking about has been done by Aaron and Corey over the years. I mean, now they've dummied down the versions now for realtors that don't understand, and they've put these in. But they've been doing this all along, but now it's now contractual. So right, Aaron, the contract went from like 6 pages to 16 or whatever it is now. But that's all this stuff that they used to do. A good realtor would do for you on your behalf. Now it's a fill in the blank. Right, so it kind of helps you out, I guess. Right. So, but yeah,
makes sense.
But they do help in certain situations. Those contingencies.
When we come back, Aaron, I want to go over, you said we have A to check box or B, and I want to go over B again. I'm a little confused. I want to make sure everybody has a clear understanding.
Sure.
Let's wrap it up with Kristen Snow right now, Traffic Center. Kristen, welcome back to the Jon Sanchez Show on Newstalk 780 KOH. Our very special guest this afternoon has been Mr. Aaron Clark of Edge Realty. Aaron, phone number, please.
7.
Beautiful. Mr. Millard.
Yes, sir.
Thank you, fellas. Okay, Aaron, again, folks, we've been talking about real estate deal goes sideways. Everyone wants to, well, not everyone, but most real estate professionals, they want to keep the deal alive. So we're covering what are some of the main reasons that deals fall apart. Aaron, you said, okay, a lot of it has to come down to the contingencies and so on and so forth. You said box A, the way I'm understanding this, is where you, the real estate agent, basically write in, 20 days for inspection or this or that, right? Am I correct so far?
No, so on the earnest money deposit, so if they default and the buyer cancels, whether or not they get that money back, box A allows them the seller to only collect what the actual earnest money deposit is. So let's say it's $5,000 and that's their sole legal recourse. Box B would allow them to get actual damages, which would be the right to recover from the buyer all of the seller's actual damages that the seller may suffer as a result.
So when is box B checked?
Default. We rarely see it.
I was going to say, who'd be stupid enough to do that?
Exactly. But, in a market where it's really crazy. So Tahoe's probably a really good example. It's a very cyclical market. And when there's 12 feet of snow on the ground, rarely is stuff doing anything out there. So for something like that, if somebody's listing their home in, let's say, I don't know, whenever time period, but they get an offer in August or September, and it's going to take 60, 90, 120 days, and it might push them up against that deadline of Thanksgiving when they would normally pull their house on the market. They might do something like that, because if that person backs out, they're not able to just put their house back on the market. They have to wait for the entire winter to go through, all the snow to melt, get the house back in order and in shape to get it back on the market and allow showing. So something like that, really it's a case by case basis, but it's primarily going to be on stuff that has a lot more consequence to the seller than just a standard deposit of, a couple grand.
Makes sense. Okay, so let's wind things down here. You put together a list of some things, basically lessons for buyers and sellers, I guess we'll call this. What should buyers do before writing the offer?
Well, buyers need to understand all of the things with financing, insurance. They need to determine what their risk tolerance is going to be before writing any type of offer. So, what happens if the inspection fails, if, they lose their job, if rates go up because they didn't lock, things like that. They need to be educated. If they're not educated on that stuff, then surprises are going to happen every hour, every minute of every day, because our business is never straight lined. It's always bouncing. Every single deal is a different fingerprint. And then as far as with sellers, they need to protect themselves with meaningful deposits by making sure they're collecting enough earnest money, that the contingencies are tight. You don't give an appraisal contingency 40 days or a loan contingency 50 days, whatever. You don't give somebody a 30-day inspection time period unless it's a unique property. But, right now the market is pretty slow. So a lot of times I'll communicate with the buyer agent, call your inspector, find out when they can do it. 14 days. All right, cool. Put 18 there. We'll give you 3 extra days. We want to keep everything nice and tight for the seller so that they're not floundering out there waiting constantly for these contingencies. And then when we get to the finish line, those things are expired. And really the only way to get out of it is to lose your deposit. So at least they have some sort of protection at that point.
Right. I was thinking back in real estate transactions I've done over my life, and I don't think I've ever had one escrow that's closed on time because, right? Because
that's kind of our ongoing joke. Yeah.
It really is. Okay. Yeah. 14 days for the appraiser, and lo and behold, it's 25 days. But what you said earlier, I think is the most important. Everybody has to sign off on that. And I've had some transactions where you got the buyer and the seller's agent a little bit lax. It's like, I know these people, whatever. Yeah, but okay, the 14 days has expired. No big deal. And like, no. This is serious stuff. So get everything in writing. Okay, so now let's talk about the importance of the team. Dwight brought a great point up. Dwight, you talk about the team aspect of it because you hit on this earlier. It's very important.
John, that's the first thing you do, right? You formulate your team with your realtor, your lender, your insurance agent, and they know how to create and keep that thing going. I mean, you want someone like Aaron or Corey in your corp because they understand how to keep it. A lot of agents just abandon ship and they leave the buyer or seller high and dry. So, I mean, you got to have an experienced quality team. It makes all the difference for your peace of mind.
Aaron, in 20 seconds, what's the art of negotiation? Old Trump book, of course, when both sides are like, nope, I'm walking away. This deal's done. How do you act cool, calm, and collected to keep the deal going?
Well, you have to be able to communicate to both parties that sometimes walking away over $500 or $1,000 or a few days is not worth it, especially when you're already invested.
Put the ego aside.
Yeah, it's not about necessarily winning. It's about everybody coming together and everybody getting a little bit. That's the biggest thing. And people that fight over $500 or $1,000 when they're buying $1 million property, it's like,
right.
Come on, man, get your head.
But don't you agree? I mean, in 10 seconds here, 9 times out of 10, it's ego. It's like, I'm not going to let that son of a gun get the best of me.
Always.
Yep. And that's where a great agent comes in, like yourself and Corey, because it's like, chill out, relax. Let's look at the big picture.
We're 90% counselors.
Yes, you are.
Realtors.
Psychologists and psychiatrists.
Yes.
Yeah. All right, brother. It's been great having you. Dwight, always great seeing you too. We will do it again tomorrow on the Jon Sanchez Show. God bless. Have a great afternoon. See you, boys.
Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.